Legends, welcome. Hope you're well, wherever you are. There he is, Richard. How you doing? Hope you're well, legend. All right. Welcome to the Daily Bias Show. It's the 12th of December. 12th where I am, possibly still the 11th wherever you are. Midnight for Richard the legend, so I guess it's the 12th for you too. So, FOMC, we are 24 hours out for FOMC. How's Bitcoin doing? Right? If you were with me yesterday, on the stream yesterday, what we specifically called out is FOMC volatility, right? Surprise, surprise, volatility. We've been talking about volatility for the last 2 weeks. We are still in the volatility window, and the theme has been let FOMC play out, let the dust settle, and let the market show its hand, right? And we were specifically looking at the fact that we have this inside bar, outside bar pattern. Okay, so I posted on X yesterday that when we see these inside bar, outside bar pattern, it's compression, it's chop, it's where neither side has taken control yet. So for me, this is like a holding pattern, right? Where it's not actionable. I don't want to jump in, but what I specifically want to observe is what happens at the extremes of the candle, because that's where the market will often show its hand. And specifically relating to FOMC, I said here yesterday, we don't want to force positioning. Let's let this weekly candle close and let the market show its hand, right? So what specifically we're looking for here, and let me just jump down into a clean chart, nothing on it, right? So this is what we're talking about, where we've got inside bar, okay? This was 2 weeks prior to FOMC. We've got outside bar, which was last week, right? Leading into FOMC, and this is our FOMC week. Now, the outside bar left us with exhaustion, or not necessarily exhaustion, but no side of the market taking control. Okay, so you can see here the buyers had a crack and failed to follow through. The sellers tried to push the market back down, but they failed to create continuation. Okay, so specifically we're looking at this week who takes control, because we're right here at the extreme of the last week's outside bar. We're at the extreme of the high. So what I'm specifically looking for is, does this week's candle close beyond the high? And that would give us a bullish close. And to me, that would then set up potentially next week, my bias, it would increase my probability of a bullish following week. Okay, which leads into the counter trend rally thesis that I've been discussing over the past weeks. Okay, however, if we fail to close beyond the high here, because now we've already swept the high, so if we close beyond the high, then that's going to close as the sweep of last week's highs, and we've got to be prepared for, at the very least, potentially more chop, but potentially the beginning of a continuation down at least into these levels, and possibly down into these lows. Okay, so that's the key signal right now, is how does Bitcoin behave around this extreme of last week's outside bar? Now, I specifically said I'm sitting on my hands until the candle closes, so I can observe price action. The only thing that would potentially drag me into market sooner than the candle closes is if we get some type of bullish acceleration prior, right? So none of this messing about with the high sweeping, chopping around. If we jump right down onto some of the lower time frames, you know, we're chopping about at this high. Okay, we've tested it. We've now tested the daily high a few times, right? Taken liquidity again. You know, we took this liquidity, right? Is this, we took this liquidity here, right? Now, why aren't we breaking down yet? We've taken all of this liquidity. Does that imply we have some demand coming in? Well, if that's the case, we want to see some type of follow through soon, right? Hence, we just got to be patient here because I don't see the need to rush in given the context, given the post-FOMC context, and the fact that we have a bit of a market battle right now where you've got many participants screaming QE starting, okay, and they're in the camp of a massive liquidity surge coming, and then you've got many participants screaming bear market, right? So hence we're seeing it get battled out in the price now. Cotstar, there you are, legend. Hope you're well. Thanks for joining. So hence the trade for me, right, is patience. Patience is the trade, if you'd call it a trade, right? No trade is the trade for me right now. Want to see what happens at this high. Now, if you have been keeping up with me on my Substack, where I post weekly, give my market updates, or on X, where I'm pretty active most of the day, you'll know that I believe that we have the formula for a potential counter trend rally, okay? And I make that point that it's a counter trend rally because the weekly structure is bearish, okay? And since we shifted structure here and created this high here, from here to here, we haven't created a new weekly high yet. So hence, given we have all this room and we have some potential liquidity catalysts, there's room for this to create a pretty significant move, even if it's back here into, you know, into some of these resistances that I've called out in previous streams. Hence, that would be the counter trend rally. But given that the weekly structure is bearish, what I'm anticipating after that is that we will turn back down for continuation lower. Now, obviously, price action will lead. So if we see things change along the way, then I'll call it out here on stream. And if we need to change the bias, as you guys know, I know exactly what I need to see to change my bias, and I'll change it willingly. So we'll do that as we go. But as it stands right now, my thesis is counter trend rally. You know, I don't know exactly how high it's going to go. I've got the major flip zone that I've called out on previous streams, which is basically, if we just quickly revisit that, which is basically through this area here, where we've got our weekly fair value gap, we've got our bands that are creating separation, and importantly, we've got the current daily structure high. So down on the daily, to be bullish, we've got to flip this level. So for me, right, this is the area where I see, at the very least, if we're coming into this area, I imagine we'd have some resistance. But this is the major observation area where if we're kind of powering through, getting back above, we've got all the signals and data supporting at least some type of short-term liquidity coming through, then above this area is where I will be bullish again. Okay, well, I'll start shifting my bias. But again, coming into this area, if we're not seeing the liquidity coming through and we're seeing broader market signals that are showing weakness, this is where I'm looking for the macro short or through here. When I see that momentum loss and I start to see my signals, that's where I'm looking for the macro short back down into these levels and for that continuation trade. Let me just clean this up. Probably quicker if I do it like this. All right, so if we just come back to the clean chart again. Now, in the context of a counter trend rally, right, from here to wherever it goes, whether it's here, whether it's here, we're already seeing that if we go over to Bitcoin dominance, we're already seeing that there's a likelihood that many altcoins will outperform. Okay, and when I say outperform, I'm not saying that altcoins are going to go create new highs or anything like that. I'm just saying relative to Bitcoin. So if Bitcoin's going to move, if Bitcoin's going to move from here to here and do a, call it in total 27% move, or even from where it is currently, if it pulls back a little bit and then heads somewhere here, 12% move. During this 12% move, many other altcoins may do 20, 30, 50, maybe even 100% moves. If you look at Fartcoin, for example, it's already up, what is it, over here. Since this local bottom here, it's already up almost 100%, right? So hence, this counter trend rally, there's potentially going to be some good opportunities to get involved with some altcoins. So that's my approach. Is we've got a potential setup brewing for the counter trend rally, and I want to participate in it. Now, again, if you're just keeping up with my Substack where I lay out my positioning bias, okay, I've mentioned here that as we're in a macro bearish trend, I'm treating it as a bear market environment. So for me, that means I'm not interested in spot longs yet. I'm only futures trading, and my macro bias remains bearish. Counter trend rallies forming, and I go on to lay out the ideal setups for ETH and Bitcoin in counter trend, as well as the macro continuation short. However, in the context of a counter trend rally, right, which chart did I have here? In the context of a counter trend rally, right, I'm not looking to buy Bitcoin in spot here. I'm just looking to play Bitcoin potentially if I get the right setup, play Bitcoin via futures and trade some of these alts via futures. Okay, so I don't want to mix that up in terms of my positioning. So you understand that I have no intention of buying any spot for any coins at this point in time, because we're in a macro until proven otherwise via weekly structure and other signals I've called out on stream many times. This isn't the environment for me to be buying anything in spot, even if I believe there's a counter trend rally. This is the trading environment for me. So from here to here in this counter trend rally phase, I'll be trading futures, right? Perpetuals. I'll be taking some, likely some swing longs, maybe some directional trades along the way. The bigger position for me will be getting into the macro short, okay, to head back down from wherever it is here. And now, obviously, I can't short with spot, or maybe there is ways to do it, but I've never done it before. But that's where I'll be using futures again. But that's the bigger position to me, right? So when I'm trading futures in a move such as this, okay, that's where in this circumstance, I'm not risking major portions of my account or allocated capital, right? I'm just taking more, potentially 1-2% trades, right? So because it's not the main move that I believe I want to participate in based on my current analysis is the short. That's where I'll be looking to build a bigger position. So this counter trend rally, right, from here to here, okay, because this is the main trade I want, right? The short, that's the macro continuation trade. Okay, this is the counter trend trade. For me, I'm just looking for the best setups that I can find for this counter trade, and I'll be putting potentially 1%, 2%. It's very unlikely I'll put anything more than 2% behind some of these trades. But when it comes to this macro short, that's where I'm more inclined to potentially scale in, maybe up to 3-4. I never trade more than 5% on my futures accounts, so I'll never put I'm talking about risk here. So how much I'm risking in the trade. So let's say hypothetically I've got an account with 100 grand in it. If I was putting 1% in there, that'd be putting up 1 grand of risk, right? So that means if the trade loses, I'll lose 1% of my account, right? So I'll lose 1,000. So in the context of, back here and here, so per trade, I won't put anything more than 2% into something in a move like this. And it's all going to be, 2% is the max. But then in the move like this, where I'm looking for my bigger trade, I may scale in up to 5%. Okay. And for me, that'd be my max. I never put more than 5% at risk in any of my futures accounts for these types of trades, right? So that's basically how I'm planning it, how I'm approaching it. Okay. So again, just to reiterate, I'm not letting myself get into the market unless one, I'm waiting for this weekly candle to close, or two, we see very strong acceleration above last week's high. Okay. And if you're here with me daily, or if you're following me on X, you'll know when I'm going to start participating if we see this acceleration, because I'll start calling it out. That's my position on Bitcoin at the moment. So if we just do a quick scan around the markets for the charts that matter, Richard's favorite chart, stablecoin dominance, we remain paused at the major level. Okay, just remembering up equals massive pain for the bulls, that is, because we'll be heading into deep bear market territory. At the moment, we're still paused here. Down on the daily, we're seeing some potential, right, lower highs coming in. So what I'm kind of looking at the moment is, if this is going to stay intact and this is going to break down, something to keep in mind is you don't want to be positioning kind of down here or down here, because if this is coming down, right, you got to be thinking that support is where you want to be getting out of trades, not getting into trades. Okay. So hence, I'm watching closely the signal this week on Bitcoin, and I've already started to make my shortlist on some alts. We'll go through that in a second, right? Because I want to be positioning into potentially this, right? And at worst, like if I start seeing the breakout and then lower high here, this is what you want to position into, because you want to be getting out as we approach these big support. Those are take profit levels. That's not get into market levels. Okay, because you got to remember, this is the stable dominance chart. So it's showing you the money flow of internal capital moving in or out of the market. So if you're trying to get into the market when the capital's already moved in, well, you got to be considering that capital's either going to move in or move out, right? So if you're trying to get in down here, and that's the area where capital starts pausing, right, and it's going to start moving out, then you're going to be on the wrong side of the market. You've waited too long. So that's why you got to keep watching these key pivotal areas, and that's why I keep harping on about this chart, because if the best positioning for a counter trend rally, let's say best case it comes right down to the multi-cycle trend line, you're going to be too late if you're positioning here, because that all might be the reversal point, right? We actually want to be positioning through here. Okay. And if you just think from the invalidation perspective as well, if we're watching this and we're positioning through this consolidation, if it starts trending back up this way and breaks this side, it's also another trigger, along with obviously price action first and foremost. But this is telling us that, hey, capital is now heading out of the markets. So that's just a note, because I've made this mistake in the past, especially when I was a bit newer to trading and newer to this chart, where I'm looking at this and I'm going and I'm seeing, for example, price coming down into these lows, and going, oh, it looks like, capital's going in, right? Because if you bar replay this for a minute, right? If we just bar replay this, Oh, you can't. Okay, you can't on this because it's a combined chart, right? So when you see, if you just pretend you can't see here, and when you see this kind of thing happening and you're looking at it, you're seeing it going down and you're just thinking, oh yeah, position because it's going to keep going down, right? Especially when you've got the emotions running wild of when this is happening, you got markets pumping, okay? When really, especially on a chart like this in stable dominance, you've got to really consider that once you're coming into supports, that could be the end of the rotation, not the beginning. Okay, so support is where you should be considering taking profits, and resistance is where you should be considering getting into markets when you're looking at a dominance chart like this. So that's on watch for us. Bitcoin dominance, we briefly touched on it before, but as you can see, the weekly is still bearish, confirmed bearish. Okay, so the main signal that I'm tracking on this is if this starts heading up, okay, and it confirms bullish again, while prices are going down, so even while Bitcoin's going down or other crypto is constantly going down, right? We're in a downtrend. That more often relates to end of cycle behavior and deep bear market behavior, because if you just think about what's happening, it means that participants are exiting all their altcoins and rotating back to the crypto safety trade, because Bitcoin is the crypto safety trade, right? We know that time tested over time. Worst case, if you buy at a bad time, just hold it for years, and you know that the general trajectory is up, right? If you're a believer in Bitcoin like I am, you know the general trajectory is up and to the right. So hence, when you see Bitcoin going up but the price going down, as well as altcoins getting destroyed, right? And generally the crypto market, if you're just looking at total one, for example, which is the total market cap, and you're seeing total one coming down, right, in a downtrend with Bitcoin dominance going up, that's a sign of the safety trade. Okay, so that means if you're in alts, get rid of them, because that's exiting rallies as capital exits alts and heads back into Bitcoin to just stay safe in there potentially for the next cycle or for whatever reason, right? So that's just the main signal to keep in mind there. Never seen it before, hey Rich, the stable dominance. All right, so if we just quickly scan around markets, again, just sticking to the charts that matter for the moment. Dexy, as expected, it's coming down. Obviously, rate cut weakens the dollar. So like I said, the play zone for us is here to here. Okay, we've got to really consider what's going on here, other factors, because if it keeps breaking down, that could be bullish for risk assets, but not automatically assumed. We've got to see if there's any recession concerns. Aside from that, what's on watch? The big chart on watch, and this isn't just from me. This is, I can guarantee many participants in the market are watching the Fed's balance sheet, because the big question of the day is these buybacks, is it QE or not? Right? So is it, is the money printer actually turning on? That's the big debate that I keep seeing across X. And to be honest, I don't have, what do you call it? Like, I don't have a stake in the bet, call it, because I'm not a macroeconomist. I don't know the ins and outs of how, what the treasury buybacks actually mean. What I care about is what happens in the balance sheet, because I know that from historical patterns and what's required in terms of expansions, we need to see the balance sheet expand. Okay, so hence, that's all I'm tracking. I don't really have too much speculation that goes beyond the fact that if we just look at historically what happens during expansions, okay, if I just put Bitcoin on the screen at the same time, you need an expanding balance sheet, right, for Bitcoin to have major parabolas. So if you are a bull and you want you want Bitcoin to make a new all-time high, well, you want to see this in the balance sheet, okay? So my only opinion on this is, I know what happens if it goes down. We all know what happens if it goes down. I know what happens if it goes up, okay? I'm sure we all know what happens if it goes up. I don't know what happens if it just does this, okay? If it just flattens. I don't know what happens if that occurs. So hence, I'm going to be observing price action, and as always, price action takes the cake for me. So even if the balance sheet's going up, right, and price action continues bearish, I'd be a fool to just be longing the market, hoping that price action is going to turn over, because price action is the thing that I trade, right? So that would be me going against my systems and going against the actual thing that my money's in, right? So hence, if we see the balance sheet going up, we'd need to see price action develop bullish structure with it. And it'd be, if there's a massive divergence there, where the balance sheet is going up and price action's not, there would be some type of massive edge to exploit there, and we just need to work out what it is. Whether it's the lag, we just need to work out which one's telling the truth, whether it's price action or the balance sheet. So that's the other thing to consider. But hence, my default is always price action, because that's the thing that we trade. It's the cleanest and fastest signal on what participants are actually doing in the markets, not what they say they're going to be doing, not that they're declaring that they're starting a treasury or doing this, that, and the other. The price moves based on buyers or sellers, right? So we know what's actually happening based on the price action. So hence, that always comes first. But we look at all these other conditions, because all these other conditions create the environment for price action to behave in a certain way usually. So they often go hand in hand. So this is the big one that's on watch, because within the next 24 hours, the weekly data from Fred and call it, the Fed, will all come through. So it's due December 11th, which is today, right? Because I'm the 12th. I'm obviously in Australia. So I don't know exactly what time did it come through last time, 3:33 p.m. CST. So that's probably going to be, I don't know. I'm not going to get a converter out. I just know within the next 24 hours, we'll get this data. Okay. So not only will we get this balance sheet data, we got to see what's going to be happening in the TGA, right? Because our net liquidity will essentially show us if there's some type of offset to what the QE is doing as well, right? Because if you're getting this, whatever it is, if it's stealth QE, or call it, let's just say they are expanding the balance sheet, and if it just flattens out, but the TGA refills, okay, then that's going to be a net drain on liquidity, potentially, depending on how much they refill again. So hence, that's why you can't really just track one of these things alone. And that's why I built the net liquidity indicator, because it's going to tell us, based on the three key factors that that make up liquidity, we're going to see, because they can offset each other, right? So hence, net liquidity is on watch over the next few days as it comes through, and as this critical kind of liquidity data comes through. Right. So I guess the other thing to mention as well is we've still got Bank of Japan next week. I did notice the yields coming down slightly overnight. So that might reduce a little bit of pressure on the whole potential hike. Okay, so we'll see. That's still somewhat of an X factor, right? Next week, it's a bit of the unknown. Because based on Ueda's speech last week, what I was gathering from it is It's potentially a dovish cut. So they were going to, a dovish hike. So they were going to hike rates, but they were going to offset the rate hike with QE. So to me, that just means kick the can down the road, right? Like they're going to, here we go, I wrote my notes here. So it just means they're kicking the can down the road. But from a liquidity perspective, it doesn't create certainty around the long-term trajectory of market or market expectation for liquidity. It just means in the short term, we're gonna just kick the can down the road. So again, for me, that's more supportive of a short-term counter trend rally. Let's finish up on some altcoins. All right, so I've got my crypto scan list here where I dump in popular coins along with most of the top 100 by market cap. If you've been keeping up with me in any way, shape or form, you'll know that I give away this token rotation indicator for free, which basically just shows you whether a specific token is outperforming the majors over multiple time periods, which you can then use to understand rotational flows going in and out of a token. Okay, so if we see these 1 day to 1 month lighting up, you know that this particular token is catching flows, okay, rotational flows. When you see them turn red, it's potentially losing rotational flows. So you can literally just scan through charts, just flick through them. So we can see here Bonk is catching some early flows. So for the last 21 days, we can see rotational flows coming in, but you can literally just flick through charts like this and quickly and easily spot the rotational flows. There we go. So Aave as well, right? So essentially it helps you weed out the junk, right? Because you don't want to be touching a token that's not catching rotational flows, because you know capital's just not moving there. If you're not outperforming the majors, why would you touch anything outside of the majors? So hence we can quickly flick through. So Aave, ARB, nothing that interesting there. Nothing. I see, I'm not even looking at token names. I just look at the rotation indicator. Bitcoin Cash, we can see that it's had strength pretty much all throughout the last year. Some rotation happening, but this just could be consolidation, right? That's where you then look at your technicals, right? And for me, I don't know. It's just an ugly chart for me. It's so like choppy. So I'm not really that interested in general. CAS had rotation, right? Within the last month, it had some rotation, but it's lost that momentum, and we can see it then in the chart here. You can see it had. So when I look at certain things like this is where if you keep using this indicator and then you start applying some of your call it chart intuition that you develop over time, you start developing a bit of a sense for what's going on. To me, this is potentially some type of hype-driven exit rally. Like Casper probably got some type of news or some type of attention, but there's no follow-through in the rotation. So to me, I just look at that and I go, cool. There was probably some type of scam narrative. Maybe the devs or the team came out with some type of good news that pumped it for essentially a month, and you'll see this all the time. But look at how it's just been straight sell-off since. There's barely been any green days, right? So a couple of days here, it's just been selling off. Whereas if we go back to what was showing rotational strength, was it Aave? Right, so we can see almost 3 months of outperformance of the majors, definitely of Sol, ETH to a lesser extent, okay, but it's really picked up over the last month. And if we just look at the difference in this chart versus the CAS chart, okay, can you see how, again, just applying a little bit of that, call it chart intuition, you see the difference where this has had a rotation come through and it's having follow through. Look, it's building internal daily structure. Okay, so you got the last daily highs here, And this is the actual primary daily high since it created this disgusting wick, right? So here's the primary daily high. This is all internal structure. Okay, so from here to here, you got this internal leg of price, and now it's actually trying to build some bullish structure, potentially at least to go up here. If it flips here, you'd anticipate that it's attempting to run to this high. Okay, so you can see here, when you layer in a little bit of, call it context, chart intuition, we can see CAS, I bet you if you went back to the 22nd of November, there would have been something floating around, some type of narrative, some type of potential new release or this, that, or the other, which ultimately was one of those, call it buy the rumor, sell the news kind of events. It's had no follow through. Okay, so that is not a sign of strength in my opinion. Whereas here we can see that it's had consistent follow through, pretty much here backed by structure all the way through. Rich, was there some news on or something on CAS? All right, so a couple of the charts that I was interested in. Yes, there was. Yeah, so that's what I thought, right? It had some type of news, but obviously it's nothing meaningful. Otherwise, you'd see follow through. Some of the ones that I've highlighted are, where are they? I was at Link. Okay, I like Link as a beta play on ETH. It was showing rotational flows. Now it's been a little bit scattered, but for the most part, it's following ETH, right? So you see there's some days where it's just outside of ETH's performance. It was more of a fallout and people backed the CAS dev. Yeah, there you go. So all of those kind of events are almost always just exit rallies or short-lived events, because there's nothing in that in and of itself. Yeah, mini pump, no follow through, right? It's not like they've significantly updated the chain, or more importantly, like they're just adopting so many users and dApps. You're seeing developer growth. You're seeing all the developers migrate and start building on that chain. Usually where you find developer activity is where you find the stronger chains. Usually, not always. Like DOT was a major fail for that, right? They had, I think at one stage, they had heaps of developer activity. But if you just look where the devs are going, that's often a good indicator of where strength may come through. So Link was one that I've got on my watch list. Fartcoin, obviously, because it's just had pretty good strength. Where is it? Fartcoin. And I'll show you. Okay, see, even Fartcoin's starting to lose some rotational strength. So hence, I haven't positioned or anything on Fartcoin. I haven't positioned on anything because I'm first waiting for the Bitcoin resolution, right? Because Bitcoin sets the direction. You just got to keep that in mind. If Bitcoin is topping and losing momentum, expect alts to do the same. If not earlier, it will be very soon after. So hence, I'm waiting for Bitcoin to give us the signal, the weekly close, before I actually jump into any of these as well. Because I might be shorting things next week. And if I'm shorting things, I'm not really wanting to get long, right? It all depends on that signal that we're talking about. Mantle, I saw it was starting to have some rotational flows. And to me, again, this is just using a little bit of that chart intuition. When I look at Mantle, and this is what I encourage you legends to do, is flick out to the weekly chart. Okay, that's what's pretty important right now, because a lot of these charts haven't developed their next leg of weekly structure yet. So if this is a counter trend rally, this is likely what the chart's doing. You know, just like here, it's got to develop its weekly structure. So potentially there's the big fair value gap there, right? So this is the target area I'd be looking at for Mantle for a potential short if we do get that rally up into that area. But when you look at Mantle, for example, to me, when I look at this, I go, cool, there's its main parabola. So even if I was to trade this from a counter trend rally perspective, this move was already 5x. So I'm not expecting, I wouldn't be expecting this to create any type of all-time highs if I was to get involved with it. One, I've got that big fair value gap there. So, you know, if I see a really good setup, then I might just be trading it somewhere in here to here, or, you know, just to kind of that area. If you're a fib trader, you might be looking at 618s and all that kind of stuff. If you're a range trader, you might be drawing the range like this, okay? And you're saying to yourself, cool, here's your deviation, here's your mid-range. So you're trading it back into the range. You know, what I would actually encourage you to do, this is how I'm going through and identifying strength at the moment. I'm looking for charts that have, this is why I was looking at Link, for example. I'm looking for the charts that have swept November lows. Sorry, not Link. I was looking at Tau, right? I'm looking for charts that have swept previous month lows already, okay? Because if you just think about it, given the context as well, if we're thinking, all right, counter trend rally, okay, and I'm thinking the time frame is potentially, you know, call it 2 weeks to maybe 6 weeks, six to 10 weeks, okay? So I want to see what charts in that time frame are already giving signals that align. So hence I'm looking at 2 week, 3 week time frames. I'm looking where the sweeps are happening, right? Because the sweeps are showing us failure to break down, right? Failure to accept lower. Okay, so either buyers stepping in or sellers becoming exhausted. So hence here, first I'm looking at, I'm going, cool, which charts have already swept November lows? Okay, that's step one. So I'll call here November lows, right? So first I'm looking at that. I'm also obviously looking at the structure as well, right? But I'm just looking for those higher time frame signals first, right? Not much to see on the 3 week. We've got a potential inside bar developing, but here I look at this and I go, all right, cool. So even in the 2 week, in the shorter term, we've also already swept last week. That's a confirmed sweep, right? This isn't confirmed yet, okay? Because we're still in November, but we've got a confirmed two week low sweep. So I've got a potential target of here, right? I can't use November target. I can't say that it's going to go all the way up to here. At the very least, I've got to wait for this candle to close to see how it develops. But in the shorter term, I'm looking here and I'm looking pretty much from 1 week to a month and going, what other signals can I see, right? So swept here, that's been mitigated, right? So when I look here, I go 2 week sweep. I may have room to play here, right? And then I come down onto my weekly. Then again, now this is where I'm looking at structure development a little bit more. And, you know, we can see that pretty much bearish, okay? Then here in this leg of price, we're still in this leg of price, okay? And we're ranging further. But when I look at this, I then go, all right, so we're in an internal leg of price. So again, I'm not really trading beyond setting my expectations correctly. This is the max kind of play zone, and I've already got a target of up here. So then I'm looking here on the weekly, and what do I see? I go, cool, now we've even got the weekly sweeping here. So since we had the push, which created the low, we got outside bar, right? Now this has been the volatility window that we've been tracking. Okay, now through this volatility window, we had the inside bar. The inside bar lows have been swept. Okay, the candle's currently bullish above the weekly open. So even just in this in itself, we should get some momentum if these sweeps are going to hold to here. And that's where I'm looking at this and considering once this momentum, so we got some daily structure that's trying to shift. If we get this momentum potentially squeeze in this counter trend rally higher? Now, obviously, I've got all my own personal systems for exactly how I get into these trades and what I do, but I wanted to share with you guys just how to potentially look at things from the higher time frame context, and how to start framing your ideas to identify. Because if we come down onto the daily as well, I guarantee that we'll start seeing in the structure, right, if this is starting to play out. See how it's starting to round? We've swept the low here in the daily. Okay, so once we get above here, right, this structure is bullish. Okay, so the lower time frame is trying to align with those higher time frame early signals that we're getting, right? So again, if we start to see rotational flows come through, then that'll give us another point of capital rotation supporting the thesis. But at the very something you can go through and do right now is just go through and look at what's already swept the monthly low, okay, the previous month low, and has already reclaimed its monthly open. Okay, so then that could be a good filter as well to go, all right, I've got this on my watch list because it's already swept the lows. So even if Bitcoin was to have a little pullback, I'd still be looking at this, and if it defends the monthly open, then that could be the basis of my setup to begin building a potential trade for if we get the other counter trend rally signals, right? So hence Tau is on the list for me because it's already swept the monthly lows. It's back above the monthly open, and I am looking at this basically this area of, call it area of trade or area of doing business. Like, my expectations are get into a trade. If it comes back to counter trend rallying this thing, my expectations are, cool, let me just get into a trade here to here is the meat of the move that I want to be a part of. Anything extra, and I'll already be scaling out. Okay, so that's just how I'd be approaching this thing. So anything extra, cool, it's a bonus, but the bulk of the money for me will be made as long as I can nail a move from here to here. And then my risk is going to be contained, within these lows, within this area. So if you're just flicking through charts, just do that from 2 week up to the monthly. See what's already giving you some early signals of exhaustion or failure to break down further with buyers stepping in. And that's a good way to create your kind of short list, right? So if I go back down to, was it Fartcoin that we said was... Yeah, so we don't have a monthly sweep on Fartcoin, but we've got an inside bar developing. So if December closes above this, but again, you can look at this monthly open, right? And you can draw your line in the sand there, where really, if you look at Fartcoin down here, we did come down and sweep out these monthly lows here. Okay, then we've got compression, and Fartcoin has been showing some rotational strength. We've already got daily structure lifting. So if it's going to defend the monthly open, right, and we can see here, okay, so last week swept the highs. So, and now we've got an inside bar. So if we get an inside bar here, next week sets up a potential sweep setup here, because if you get the sweep next week, right, based off this inside bar, it shows that sellers stepped in, but the buyers are still too strong, right? So maybe the buyers obviously had to cool off here, but there's still some type of demand, and there's not significant sellers stepping in to which they could even mitigate somewhere down into these lows. We've still got demand here. Okay, so then next week, I'll be looking at this and I go, cool, above the monthly open, as well as buyers stepping in here. If I get a sweep of last week's lows, based on this inside bar, that's where I'll be looking for my triggers to potentially go long on this thing. That's how I'd approach something like that. Given that Bitcoin has swept previous weekly high and failed to reclaim the yearly open a few times, what percentage probability would you give that that we will now go and sweep the previous week's lows. Yeah, so that's basically the main signal that I'm watching at the moment. So back to Bitcoin here, right? So right now, earlier in the stream, I mentioned this is the volatility window, right? So we've got the exhaustion on either side. So the first thing I'm watching right now is, okay, forgetting the yearly open or anything like that, because if you ask me, and this is purely my opinion, yeah, we're all of us as traders are trading off our own speculations and opinion. But for me, the yearly open's no longer on my chart, even when I come back to here. Okay, this is because the way that I approach my charts is I'll always keep culling things that I don't think are relevant anymore. So for me, I don't really care too much about the yearly open for two reasons. One, the yearly open for me was important when we first tested it. Okay, right? So when we first, am I on 12 month? Yeah. So when we first tested it, right, that's where it was important for me. Okay, and if you legends remember, it didn't mean anything, right? So we already sliced through it. Now, when I look at the yearly open now, okay, we've already had 1, 2, and now we're testing it again. But I've already now got other signals that give me a much better read on it, because the yearly open in itself is just now a big, like a big kind of unactionable signal. So what, if we get above the yearly open, then what, right? What does that actually mean? For me now, these lower time frame signals are more important because they're going to give me a better read on trading it, because I don't look at the yearly open and see that as, if I was potentially layering context of being a spot buyer, okay, and I was bullish for whatever reason in my thesis, I was bullish, which I'm not. That's where I'd still have the yearly open on the chart. And for me, it would be like, cool, reclaim the yearly open, and I might want to buy a chunk of spot. And if we lose the yearly open, then, you know, I'm looking for that bigger trade into the all-time highs. Now, because that's not my context anymore, and I'm just looking for a counter trend rally, the levels, the yearly open is less of a relevant level to me, because it's not actionable, okay? Because it may be just some point of confluence, but I've now got these other levels that I can actually trade. So for example, if we close above this level, right? If we close above last week's highs, like I mentioned, I'll be eager to be bullish. But then what I'm observing is, what does price behavior look like from here to here? So this is what I'm basically going to be calling the play zone, because our daily structure high is here. Okay, so this is how I sequence my thinking, where my first next signal is, cool, let's see how we close this week. Okay, how we close, how bullish we close, how price responds after early into next week, into some of those other events that we've got, right? We're all going to see it play out in the price chart. And this is the play zone where I go, cool, if we're going to be bullish, this is the max range where once we get up to here, I'll be very cautious, okay? And I'll be looking to be exiting positions up here, because remember, my bias is to head back down. So hence, on the upside, that's what I'm looking for. On the downside, right, if this resolves as a sweep, okay, then I'm going to be less, again, I got to see what the price looks like going into next week, but I'm going to be more favorable to look for shorts. And I think, given the current context, this is potentially a range for some time, okay, from here to here, okay, and then here, because you got to remember how price pivots. So if, for example, the market still just needs more time to digest, you know, by next week, maybe we digest the FOMC, but then we haven't fully digested the BOJ stuff, right? Now, if the BOJ stuff next week also comes in as interpreted as, not a concern and bullish, in the interim, we might have swept here, but then in that instance, we might just be mitigating these lows, which also then creates a potential structure shift, because this will become the new weekly high. And it means that if we just SFP down here, okay, like we did here, right, which moves the weekly high here, and we get back above, well, then that on the weekly then suggests that we should be starting to become bullish again. So you can see how it all develops, right? Like in these conditions, it's really just level to level. Whereas when for example, when you're trading down here into the bull market, you're buying spot, looking to position into, a significant macro move. Whereas here, we're in the transitional phase. So we're trying to work out whether this first shift in structure is the actual shift for the big bearish continuation, right, to potentially come down to here. So we're kind of just analyzing all the moves as we go. But yes, like if we do get a sweep here, if this week does close as a sweep, in my system, because we've got at least 2 bullish candles now, this is going to validate this as a structure point. So if this is a sweep, next week I'll be observing price action and I'll be less hesitant to start taking shorts. But my first target's going to be here, right, down to these lows here, because I'd like, and obviously the market doesn't give you what you like all the time, or rarely even, but for me, just looking at historical price action into these bands, okay, and into this fair value gap here, the weekly gap, is the higher probability area for the macro continuation. So if we're going to turn over lower than this area, sure, we might just continue macro continuation, but it's not as high probability as if we turned over up here for a macro continuation, just based on my analysis. So I think if we're just going to turn over here, we could see the chop coming through where, we're back down to here, maybe we're coming back up, then we come up into this area here for the bigger macro move down. That's kind of how I see it. So hence, it's call it one signal at a time, right? So first and foremost, how does this week close? That's going to then frame my bias towards counter trend rally. So if we get this bullish close above, I'm actively going to be looking for long setups next week. If we don't get the bullish close above and it resolves as a sweep, I'm actively going to be looking for short setups, but because it's not in my high probability area for the macro continuation, my short setups aren't targeting down here. Okay, they're not targeting continuation, but my system allows me to still capture a continuation move, but realistically the bulk of my trade will probably be exited through here. Okay. Whereas next week, let's say we sweep, okay, another potential scenario. Let's say we sweep, okay, and then we diddle around next week and we come back up, we push, and then we potentially sweep again, or we have some type of inside bar, right? Just showing that there's just not strong momentum here. Maybe it is some type of inside bar here. Okay, and then we come up and do a push rejection, then that would be stronger signal for me to target back down into these continuation levels. It all really just comes down to how price is going to develop into the levels. That's why you kind of have, like for me in my systems, you have your planned areas. So for example, I've got thesis, my first distinction in my playbook. Yeah, thanks, Rich. I know this one's much longer than we usually go for. I'll wrap it up soon, but thanks, Legend. I'll speak to you soon. in my playbook, my first distinction is it a thesis trade or is it a model trade? And a thesis trade to me is that's where I look for my bigger position trades, where I'm trading a thesis, for example, like the counter trend rally. It's usually driven by macro environment, liquidity factors. So for example, the counter trend trades for me fit into more of a thesis trade. My thesis is we're going to have a counter trend rally. We got these liquidity catalysts. Okay, so then that's my first distinction. And then it moves to my, cool, what are my systems and my setups to trade that? Whereas my, then I have my model trades, okay? And my model trades are purely just price action, where I don't care about thesis, macro, or anything like that. I'm just trading specific patterns that I see just based on the chart alone. So, hence, right now, my thesis is counter trend rally. So I'm kind of, but to validate the thesis, it still comes back to then the system. So I'm looking for within my systems, I'll have areas where are the areas of interest where I'm interested in getting involved with the market, but then how I execute is based on what I see when price comes into that area. Okay, and then when I execute, then it moves into my management system, and that's different based on what system I'm actually trading. So then from a management perspective, it's the things like, cool, when and where do I take profits? Obviously stop loss is part of that as well. How do I scale in and out? That sort of stuff. So hence, right now, I'm still in I'm not in any particular trades, and price isn't in those key areas that I'm interested in. For the macro short is this key area. Okay, so hence, when I look at price now, this is more on the short side, falling into a model trade for me, right? Where I look at this and I go, cool, it's just a pattern I've seen play out, this outside inside pattern, then sweep of the previous week that kind of sets up. So yeah, so hence, when price comes into those certain areas, that's where, again, I've got to observe the next level of, do I get the triggers to actually execute as well? Legends, we've been on here for over an hour now, so we'll call it there. Extended stream. I know we went through quite a lot. Tomorrow we'll get back into our short, sharp stream, but if you got something out of this, like, subscribe, follow us on X, all that kind of stuff helps the channel. And yeah, I'll catch you on the next one. Thanks, Legend. I'll see you soon, Kotster. Thanks for joining. See ya.